very good day to the lecturer and everyone. Today we will present the audit of PPE, or is known as the audit of property, plant and equipment. First of all, please allow me to introduce myself. My name is Lim Min Xian and my metric number is 280142, and I will present the introduction and conclusion for this presentation. According to IAS 16, property, plant and equipment, PPE are tangible assets that are used by a company to produce or supply goods or services for rental to others or for administrative purposes. Since PPE are also fixed assets, they are expected to be utilized for more than one period and not easily converted into cash. For instance, buildings, machinery, land, office equipment, furniture and vehicles are such examples of PPE. As PPE in a company are usually not used to be sold for their business purpose, adjustment is needed to make sure that the accountants of the company exercise the right way in recognizing the PPE according to the standards. Next, standards like International Accounting Standards, International Standard on Auditing, etc. are crucial to accountants to make an auditing report and accounting report according to the standards. This is because the reports will affect a company image when the users are using the information in the reports. Thus, the accountants are playing an important role to display a company's image and its financial ability. For example, the external users of information like banks, investors, and creditors will need to use the information in the company's financial statements. Therefore, the accountants should make sure the reports are comparable, understandable, and verifiable so that the users can make financial decisions. Furthermore, we can normally see that PPE contributes a vital portion of the total assets in financial statements. Hence, an audit of PPE is considered to be more significant due to the nature of PPE itself. Then, the auditor is responsible for the verification of compliance with accounting principles and other legal provisions applicable to the company in respect of PPE. The PPE sometimes can be overvalued or undervalued because of the sophisticated process of measuring their costs or values. Also, PPE are turned over much slower compared to the current assets since PPE are not held for sale, but current assets are. To such a degree, the auditors should audit the PPE accurately so that the users can easily consume the information provided.
Okay, my name is Titra Devi Padmaraj, metric number 283110. So I would like to talk about control objective. First, in control objective, we will discuss about occurrence, which is record additional represent PPE, plant property equipment occurred during the period under audit. And also recorded disposal represent plant property equipment sold or scrapped, which is we have to record every single matters which occurs under plant property equipment, so that is goes under the control objective form, which is occurrence. Next is completeness. Completeness is all addition that occurred during the period have been recorded, and also all disposal that occurred during the period have been recorded. That means all the disposals and also additions occurred during the period which actually the plant and property, for example, you want to dispose the plant and property, for example, like the vehicle or something. So this happens under the completeness. So we have to record every single additions and also disposals. For example, you're adding a vehicle or you're disposing a vehicle, everything should be recorded accordingly. Next is accuracy. So basically all the part of control objectives, there's two things, which is additions and disposal. So in this way, accuracy, that is additions are correctly generalized and posted, and also disposals are correctly generalized and posted. So that means all these additions and disposal should be accurate and posted correctly. Next is cutoff, which is additions and disposal of plant property equipment before the period end recorded in the current period and after the period, including next accounting period. So which is the additions and disposal before the period is also recorded, current period should be also recorded, and also after the period should record, including the next accounting period. So this will all be considered under the cutoff. Next is classification. which is additions and disposal of PPE, are recorded in the correct accounts. So, in conjunction with the audit of property, plant and equipment, the auditors also obtain evidence which is related accounts for the depreciation expenses, accumulated depreciation and also repair and maintenance of the expenses. So this will all be classified under the certain details, which is, for example, depreciation expenses, accumulated depreciation and all this. So all the additions and disposals of plant, property, equipment should be categorized properly under which details it's classified. Next, I would like to talk about the balance objective, which is first, existence. Recorded PPE assets represent productive assets that are in use at the reporting period, which is recorded plant, property, equipment, which is represent with the productive asset, are always been recorded under the reporting period. So it shows that this certain product, which is the plant, property, equipment, is always exist. Next is right and obligation. The entity owns or has rights to all recorded plant, property, equipment at the end of the period, reporting the period, which is entity owners should always have the rights to record every single thing happens in their plant, property, equipment once the reporting period ends. Okay. Next is completeness. Completeness is also similar to the previous one, but here is non-current asset balances included all applicable asset used in operations at the end of reporting period. And also, what it means here is all the non-current asset, for example, cash, bank and all this, should be also included in the applicable asset used in the operation at the end of the period. So this is also should be recorded, even though the topic is about plant, property, equipment, but still for non-current asset, everything should be recorded. Next is valuation and allocation, which is plant, property, equipment are stated at cost of valuation less accumulated depreciation, which means once it's recorded under the accumulated depreciation, the plant, property, equipment should start at cost and value less than the accumulated depreciation. So that this is what happens throughout the plant, property, equipment period, which is always the depreciations, accumulated depreciation is less than the cost value of the plant, property, equipment. Next is presentation and disclosure objective, which is occurrence and rights and also obligations. Okay, first, disclose plant, property, equipment transaction have occurred and pertain to entity. That means all the disclosed in plant, property, equipment transaction have to be occurred and also pertain to the entity. And next is completeness. There are a few steps in completeness. First is cost or valuation, depreciation method and useful life for each major class, the pledging of collateral and also the major term of finance lease contracts of property, plant and equipment assets are adequate. So from here, the completeness, which is the first disclosure, cost or valuation should always be recorded, and also for the depreciation methods, useful life of each major class is equally important. And next is for the pledging as collateral and also the finance lease contracts should be always recorded as what we have done for the previous one, as for example the balancing objective. So all this should be recorded once a property, plant, equipment is disclosed. Okay, next, classification and understandability. The detail of addition, disposal and plant, property, equipment support the classification and disclosure in financial terms, which is all the details in addition and disposal of a plant, property, equipment should be supported by their classification and disclosure in the financial statement. So this is important for us to classify which exactly the plant, property, equipment is categorized under in the financial statement. Next is accuracy and also valuation. Accuracy and also valuation is plant, property, equipment transaction are disclosed accurately and at the appropriate amount. That means all the transactions, all the values which consist in plant, property, equipment should always be disclosed in the appropriate amount. That means it shouldn't be in a different amount. Everything should be correct, precisely classified in the financial statements. So this is important for us to find out whether all the values are been categorized properly. So this is very important, which is accuracy and valuation, so that all the transaction is recorded accurately in the appropriate amounts.
Good day, doctor. My name is Sivashini Narayanan. My metric number is 283074. Today I would like to present developing the audit plan. The first point is materiality. Plant, property and equipment costs are significant contributors to profit and frequently comprise the biggest portion of assets in the statement of financial positions. The auditor uses the idea of materiality both when preparing and performing the audit data. The data is considered to be material if its removal or misrepresentation might affect the economic choices users make based on the financial statement according to ISA 320. Materiality in planning and performing an audit. In basic terms, the materiality might be defined as the largest amount by the which the auditor consider the assertion might be false without influencing the choices of sensible users. Next is examples and importance of the materiality. Let's see the example here. If we use the case of company XYZ, which obtained 100,000 loan from the bank, the loan was provided by the bank but only under the condition that the current ratio of the business not drop below 1.0. This was accepted by the business and a contract with the bank was signed about it. The company's auditor learned about this arrangement while completing the audit. Next, the importance of the materiality. The crucial idea of materiality takes into both qualitative and quantitative factors. Both factors have an effect on how the users of the company's financial statement make financial decisions. Clients of the company's financial statement make important economic decisions based on qualitative factors such as the firm adjustment to its accounting policy, related party transactions, and the proper disclosure of contingent liabilities, among others. This serves as the foundation for the auditor's view of the company since it gives the auditor the assurance necessary to determine whether or not the firm financial statements are free of serious misstatements. Next point for developing the audit plan is inherent risk. Inherent risk of allegation may be not modest in the retail business since plant and equipment are often not targets of theft, but they may be high in manufacturing business because minor tools and equipment that are used in production will not be taken off the books. PPE transactions are frequently individually significant, so a primarily substantive approach is frequently used for PPE asset. An auditor's evaluation of the chance that balance in account contains serious misstatements is known as the inherent risk. For certain transactions involving the cost and capitalization of PPE, the risk is larger. An auditor can reduce the detection or risk by expanding the size of sample or by focused audit choices. By factors and examples on inherent risk. Subjective assessment, unusual transactions, and also the usage complicated investment products are some factors that might raise inherent risk. Broadly speaking, the inherent risk of a corporation increases with the complexity of its marketing strategy and interactions. These are the example pictures of the inherent risk. For the next factors, expanding representative samples and targeted audit choices are two categories. When there is a high likelihood of major misstatements, including the inherent and control risk, an auditor might attempt to keep the entire audit risk within the acceptable bounds by reducing the detection of risk.
Assalamualaikum and good day. I am Muhammad Sulmi bin Muhammad Muziki, metric number 280,540. I will continue with the designing substantive procedure. Before that, let me explain a little bit about substantive procedure. Its substantive procedure are intended to produce evidence that an auditor can use to support the assertion that an entity's financial record contains no material misstatement in terms of completeness, validity, and accuracy. Thus, an auditor performs substantive procedure to determine whether there are any material misstatement in accounting transaction. Now, we go with the possible substantive procedure for property, plant, and equipment. The first assertion is completeness. Completeness is to ensure that all PPE transactions that occur during the year have been recorded. The substantive procedure is select sample PPE from observation and trace to PPE register. The second one is reconcile and compare PPE register and general ledger. And the third one is check PPE addition and disposal to meeting minute to board of director to confirm the authorization. The second assertion is existence. Existence is to ensure that the PPE balances shown on the balance sheet really exist in the reporting date. The substantive procedure select a sample of item in PPE register and perform physical inspection on the selected item. The third assertion is right and obligation. Right and obligation test whether the client has the right and ownership of all PPE shown on the financial statement at reporting date. For the substantive procedure for freehold land and building, inspect title deed. For motor vehicle, inspect vehicle document. And for others PPE, inspect purchase invoice. Then we have valuation. Valuation tests to value equity and debt using several financial methods. The substantive procedure check cost to purchase invoices and purchase documentation. Review depreciation and check calculated correctly. And also check profit or loss on PPE disposal.
Assalamualaikum warahmatullahi wabarakatuh, and hi, my name is Muhammad Syahmi Nakib bin Muhammad Fadil. My matrix number is 280370. Today I would like to touch about designing substantive procedures, which is presentation and disclosure. Presentation and disclosure is to describe how information about assets, liability, equity, income, and expenses is provided in a financial statement. It also can determine the PPE assets and related expenses, gains and losses. It also can determine the appropriateness of disclosure pertaining to cost, value, depreciation method, and useful life of assets, and the pledging of the asset as collateral and the term of lease contracts. Presentation and disclosure also can inspect accounting policies, depreciation methods, and rates. Other than inspect, it also can inspect details of movement of cost and accumulated depreciation during the years.
In conclusion, the PPE are typically treated as risk area during annual audits by the majority of companies because of its materiality. The auditor will begin the audit process by evaluating the PPE acquisition transaction, followed by the depreciation or impairment, PPE management, and finally PPE disposal. In order to ensure that the records are a fair and accurate depiction of PPE, an audit of the PPE cycle is an objective inspection and review of the PPE cycle of the business. PPE is one of the most crucial opponents in a company because it aids in business operations. However, because depreciation and impairment are dependent on base assumptions, measuring PPE can be challenging and information can be easily manipulated. We are unable to identify an exact rate that can capture PPE. Therefore, both internal and external auditors must exercise caution in their judgment. Moreover, audit of PPE is essential for avoiding crippling inaccuracies in a company's records and reports. We are all aware that for shareholders, investors, creditors, and other parties to make decisions, a company's financial statements must be accurate and reflect the correct facts. As a result, an auditor must be able to evaluate the possibility of major misstatements in financial reporting from a corporation.